let's talk a little bit about the mining stocks, which a lot of people have been very disappointed because they've been underperforming the metal for so long now, and people are starting to question, are the mining stocks ever going to catch up? What are your thoughts here?
Well, I think there's three factors. One is controversial, and I can't prove it. It's just a thought I have. I think there has been some sort of active suppression of the mining stocks through it. You can do it so much with algorithm, computer-based trading. And so I think there has been, to some extent, a organized suppression of these stocks to keep people's interest away from the sector. And then you have the hedge funds who are always trying to make money every way they can, and sort of they're taking advantage of it. They've got all sorts of spread trades on, gold, long gold, short shares, and what have you. And it's worked because I had a great chat with a friend of mine who's one of the better gold analysts in Toronto last weekend, and he'd said he'd just been on a tour of North America, going to every major financial center, talking to a lot of significant money managers. And the interest in gold stocks and silver stocks was negligible. Basically they didn't even want to hear about the subject. And I think it's twofold. One is the fact that the stocks have acted terribly relative to the metals, and this thought that has been put out there that the metals are in a bubble. So why would you own the stocks if the metals are who underperform just before the metals are going to get killed? So you put all this together, and you can rationalize why this has all happened. But all it's created is, I think, a spectacular opportunity in these stocks. When the dam breaks, I think you're going to see 5 and 10 baggers all over the place.
Yeah, I guess one of the things you can add to the the negative sentiment is the fact that for most of the early part of the 2000s, the price of input costs, energy and labor, was rising faster than the gold price. So the margins on a lot of the mining companies had been squeezed, and they were showing poor operating results for a period of time. But now that's changed, and the cash flow on some of the majors is starting to look very, very attractive, and the PEs are coming down to really, I think, pretty low levels based on a historical basis. Would you agree with that?
Totally agree. And I was a huge sort of proponent back in those days of what you just said, that I think a lot of people fail to realize, how tough the business was. The first rise in the gold and silver prices was eclipsed by the rise in their input prices. So, it was a very hard business. Now, latterly, it hasn't been as bad. As you correctly point out, the numbers have been getting better. They're still not great. You'd think that with the prices of gold and silver having risen as much, these guys would be rolling in money. That isn't the case yet. They're just starting to really get reasonable returns in equity and on investment. So, so that really isn't a reason that can be put forth for all that stocks. That should have been the reason stocks underperformed before. Now you're starting to see the fruits of higher prices. So I don't see that as having been a major factor in this recent underperformance of the stocks. I think it was the other things I mentioned.
Yeah. From a technical point of view, the XAU's been sort of in this range, 200 up to about 230 or so, just moving sideways. Is that a bullish view in your mind, or is that, again, reason for concern? Well,
I guess it's depending where you're coming from. Basically, if you're a bear, you could say you're building a top. If you're a bull, based on the fundamentals, which I am, I think it's sort of one of these extended bases, and generally those things propel stocks to much, much higher levels. I've been looking at the charts of sort of some individual stocks. Some of them don't look great, but then I can sort of study the companies, and they don't hit their fundamentals just because of their mining operations aren't that good.
Yeah. But
what I like, for example, is Goldfields of South Africa. And the chart on that's pretty powerful. That thing's been held in a very tight range. They got tremendous reserves. They're doing lots of interesting things. And the stocks just literally sat there like a house plant. But that's going to change, and the chart would confirm that. The chart looks powerful.
Yeah, it's a sign of accumulation,
absolutely.
I would guess. We were talking about algorithm trades. I've always wondered whether or not there's an algorithm trade on that when the gold price goes up, the South African rand strengthens. A couple of years ago, we were at 9 rand to the dollar. We recently touched 6.5 or 6.55, or about 6.6. But it seems like whenever the dollar strengthens, maybe some of the shorts are buying the rand in order to offset the potential losses on being dollar short. Because the rand gold price has basically been going sideways at around 310,000 rand per kilo.
Well, it's not only the rand, it's also the Canadian dollar gold price has been kind of stable because the Canadian dollar, as you know, has been very strong.
Yeah.
Look what's happened in Australia. You know, I can't understand how the Australian economy functions after that currency went from 63 cents to the US dollar to $1.10 in what, 2 years? Two and a half years?
Yeah,
these moves in the currencies really, if you're trying to conduct business, are staggering. You better be well hedged.
Shows that the volatility comes from currencies and different central bank actions, or hot money looking for a safe haven, rather than the precious metals themselves. Because as I was saying about that example of silver buying, filling up the family car, or two ounces of silver filling up the family car, the precious metals maintain stability over long periods of time, but these currencies can be all over the place.
Yeah, like Canada's being viewed as a petrocurrency in the world. And it's justifiable. We have a very strong energy base. And we also have, at least at this stage of the game, much better finance as the United States. Well, not as much better as people think, because we push a lot of our expenditures down to the provincial level, and Ontario in particular is looking a little concerning. Our debt position in Ontario is not good. But nevertheless, I mean, from the world's perspective, we look a lot better than the US dollar. And as a result, it's pushing our currency up, has pushed it up steadily from, lows of, say, 62, 61 cents to the US dollar up to about 106. And when you have a move of that magnitude over a decade, roughly, against your major trading partner, you can't adjust. Our system is too rigid to adjust for that sort of a currency shift. So consequently, our manufacturing base is being badly hurt. I mean, our resources aren't, because the prices are flexible in the resource field. And so you've got a bifurcated country, because the resources primarily are in the Western Canada, which has maybe less than a third of the population. And all the people live where the economy's becoming squeezed because of the, what's happening to the manufacturing industry. We've still got a fairly aggressive real estate picture. I mean, the real estate activity in Toronto, considering we're just north of the United States, is amazingly good. And I mean, it's almost like two different worlds. And yet, I worry about that, because at some point, I mean, if the underlying economy is starting to fail, I mean, the real estate can't just sit there in isolation.
I've seen pictures of $1 million houses in Vancouver that, maybe had 900 or 1,000 square feet to them. It's just hard to believe.
Well, the Vancouver market's one of the hottest markets on the planet. I mean, I see that's a lot of Asian money coming in. And as you know, Vancouver's a beautiful place, so I can understand why it attracts people from all over the place. But for the sort of the guy working and living on sort of basic salary in Vancouver, it's getting really, really tough.
Yeah. Is Ontario the problem spot, though, in Canada in terms of looking at the economy because of the heavy industrial base there?
Ontario and Quebec. I mean, I think it was instructive that Quebec voted heavily NDP in the most recent election. I would suggest that would indicate that some of the populace is really starting to feel it.